Amid growing fears of a economic recession. Let's bring Doug Flynn in on all of this, co-founder of Flynn Zito Capital Management, certified financial planner, regular guest on this program. That should be in his bio as well. What do you? So I was talking to Steve Moore, speaking of, known for a long time as well, used to advise the president. He was on the show yesterday. So let's do this. Let me play. I was talking to Steve about, all these people talking about recession. Some people say the odds have gone up. What do you think about recession? And he did say that he says we might get a negative quarter. That's how he started. Listen.
I do think if you look at the latest numbers, we're probably going to have a negative quarter for the first quarter, which ends at the end of this month. But I think if we can get this trade deal done, I think we'll turn the corner and we'll see really, some really strong growth in the second half of the year. A lot of people freak out when you see a decline like we've seen in the last couple of weeks, and then they sell at the wrong time. Of course. I think if you hold on to your stocks right now, a year from now, you'll be very happy.
Yeah, so, when he said that, when he first talked about the negative quarter, I said, well, oh, wait a second, because 2 negative quarters, of course, is a recession. So what do you think? Do you agree with what he said, the rest of that?
Well, it's interesting from a couple of fronts. I mean, the old adage that economists have predicted 10 of the last 5 recessions. So there's always that out there that they're always doom and gloom. In fact, if you think about it was 2022, all we were talking about the risks of recession being imminent the whole year. And the market was down 18% that year, but we never actually went into a recession because the last one was the COVID one, which was really, really short. So you look, 1 quarter of negative GDP, in a way, I think it's somewhat by design. If you listen to the president, usually presidents don't talk this negatively. They're always talking about something positive. And in a way, it's almost like tanking it on purpose because it's the last one you can kind of still lay on the previous administration.
I think it's the bigger picture argument is like, Besson said this, the Treasury Secretary, basically, if someone came in like 06, 07 and did something about subprimes, then you wouldn't have had 08. Like the idea that they think they're getting ahead of something. It could be, like on deficits, for example. So the negative is tariffs, right? The negative for the economy on growth is tariffs. But this New York Times article, they mentioned deficits. The headline was that Trump says a recession might be worth the cost, and economists disagree. But on deficits, they say economists across the spectrum agree the government should not be running multi-trillion-dollar deficits during a period of low unemployment, when tax revenues are ordinarily strong and government spending is not necessary to stimulate growth. So cutting deficits now might be difficult, requiring spending cuts and tax increases, but waiting until the deficit becomes a crisis would be much more so. So this idea that you can get ahead of a crisis. Problem with that, of course, that the Trump folks aren't talking about cutting taxes. They're talking about extending tax cuts. So anyway, pick up on that.
Yeah. No, they do want to cut taxes, not only on personal, but also on corporations.
Right. I'm not talking about raising taxes, sorry, to get the deficit under control. Right.
And that's the whole game. And in the back of my head, I keep thinking about, Ronald Reagan in his first year. That was coming off of high inflation the first year he came in, and the market was down 10%. It was actually a terrible year. Right. And if you get that thing under control and you think longer term about what everybody thinks about Ronald Reagan, they don't think about the first year. They think about the last 7.
Right, and they give Paul Volcker, who's the Fed chairman, a lot of credit for that, all the pain. They do. And then they say the long-term gain. But here's the issue. What if you're wrong? What if your long-term plan is not the right plan?
That's the gamble, and I think that if you extrapolate out the tariff situation where we're going to win that, I think it's a game of chicken, and I think he'll play that game to the end as long as the market doesn't go down 20 or 25%, or if we don't go into a recession, I think he's going to play it the whole way out until we get there. And in the end, we're going to win that. It's just a matter of whether or not people can stick with it.
That's win on a relative basis. Like we do better than other countries, but like you and I've talked about that. That might not feel like a win.
Yeah. No, I mean, it's just, charging 10% on our cars in Europe instead of us only charging 2.5. The win would be that maybe they only charge 2.5 like we do, and we sell more cars in Europe. That's the win. And maybe you don't get to 2.5, but maybe you get to 5. But we've been paying 10 for 50 years.
So bottom line, you could see a scenario where a quote-unquote recession, or at least a downturn in the economy, might be worth it at the end of the day.
Recession's a scary word. It's not the end of the world. The real issue is whether the recession turns anything from a short-term into a long-term recession and then a depression. I don't think anybody's talking about that. Look, nobody wants a recession because people are going to lose their jobs. There's going to be issues. But a short-term recession like we did look, does anybody even remember the 3-month recession of COVID in early 2020? Most people don't even remember that being a recession, but there it was. And so if it's like that, I don't think it's a big deal. But if it extrapolates, then of course it's going to be.
All right, Doug, as always, thank you, sir. Closing bell time.